Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Monday, 7th of October. We've got a reasonably quiet open actually today. A little bit of risk aversion just starting to creep back in. We've got a pretty important week ahead with regards to the fact that we've got the negotiations between China and the US on their trade dispute back on Thursday now, so that's something that traders will be looking forward to, and it's interesting that this sort of comes on the back of all this swathe of data in recent days that have basically painted a picture of a continued global economic deterioration, and sort of put added emphasis on the trade dispute negotiations to be resolved, and then hopefully to put a stop to this slowdown that the world economy is going through at the moment. But the signs out of China are not all that great with regards to how these negotiations are going to go this week. Generally speaking, though, what we've seen is just a little bit of a stabilisation on the dollar. That's come as we've got Treasury yields, which sort of continue to fall away. We had that payrolls report on Friday, pretty mixed payrolls report. Treasury yields just sort of edged lower into the close. A little tick higher today, but nothing really in terms of direction that we can garner from that. So there's basically a consolidation on the dollar. Little bit of an edge higher, considering that euro has just dipped below into negative territory, but you've got sterling, which is under pressure. That's comes as the signs are that the again the negotiations between the UK and EU are going to be not looking all that well in terms of progress on towards a deal, and again that's sort of hitting sterling. We've got the risk appetite being shown through Aussie and Kiwi, both around about 0.5% lower now, but broadly other than that, not a great deal of direction. Gold, couple of bucks, $3 lower. Equity markets basically flat. You had that jump on the S&P 500 on Friday, but we've seen the futures coming back this morning, so European markets are sort of around the flat line, a bit mixed, as were the Asian markets. So we are waiting for more key drivers through the data points this week. We haven't got any data today, so we're looking out for further towards the trade dispute negotiations later in the week. Now, in terms of my chart of the day, we've got Kiwi versus the US, which had been swinging high. You had 3 positive candles in a row, but looking interestingly with this bullish divergence on the momentum indicators on the RSI, and also the stochastics running higher, MACD lines ticking higher, sort of going towards the potential for a recovery, and I think it's the important resistance to get through would be that 63.48 mark from a couple of weeks ago. If that resistance can be breached, then it sort of completes a little base pattern that would bring you back into the 64.50 area, which would be that September high, and a decent recovery in prospect there. But this morning, what we've seen is the market rolling over. When I wrote this morning, we were sort of around the 63.20 mark, 63.10, 63.20, and the market has since the Europeans have come in and risk aversion has just started to creep in. We've seen the Kiwi falling away quite strongly. We've also seen arguably a completed little top pattern as well, which you could imply, what's that, about 40 pips of downside, so maybe back towards 62.50 area, 62.50 being the reaction low, which again is a bit of a pivot line here. So move back towards that pivot line, 62.50, 62.70, again another pivot area on the Kiwi dollar. So we've seen this deterioration in the market this morning. Is this going to be the rolling over of this recovery, really, would be the question. As I said, momentum indicators have been improving, and that still is the case, so there is the prospect that this could continue to run higher. However, it's obviously an important band of support on a near-term basis between that 62.70 to 62.50 area, as the key basis of support. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars.